Hello everyone, welcome to the next episode of Impactables with Rishav. Today we have a seasoned banker, Mr. Vivek Tripathi, whom I've been knowing for a long time, and finally we have a guest today. Welcome Vivek.
Thank you so much, Rishav. So excited to be here, and I'm sure this podcast is going to provide a lot of value content.
Definitely.
Yeah.
So I'll be starting with one major thing, because you have been into the market from around like 15 plus years. Like you have seen all other fintech companies or non-traditional banking companies coming in the market. So like what change or what things you have seen, and how the bankers are keeping themselves up to date with all the non-traditional banking companies in the market, and what shift you have seen in the market?
Two things what I want to talk about on this, especially on this fintech and these new tech companies, because at the same time they do gives a lot of challenges to these traditional banks, but at the same time it is more like an opportunity for us, because if you see these tech companies or these fintechs or the new age company, the way they are quick, very quick in their approach, they are very innovative, and at the same time they are very adaptive also to the fast changing environment, and everything with them is centered around the customer experience. Whereas if you see the traditional bank, because of these fintech and the new age company, they are pushing a lot in terms of changing the way we used to operate before. Now we are suddenly investing very heavily in the whole digital transformation. And if you see, we are improving our mobile banking, we are improving our onboarding process, we are improving the way we used to do the KYC and everything. So we are adopting a lot of digital initiative and a lot of digital platforms, how we can improvise the whole customer experience, how we can make the simplify process systems, so that it provide a whole process efficiency for the customers. But at the same time, everyone have their advantage and disadvantage. Okay, so if you look at the banks, the advantage with them is the kind of customer reach we have, the kind of trusted relationship we have, and we have a very deep understanding of the regulatory knowledge. But at the same time, we are because of the so many regulatory challenges and everything, we work in a very defined environment, and that is where for me to do all those innovations and adopt to the new technologies, it's very costly affairs, and at the same time there are a lot of approvals, process, systems in place which you need to adhere to. Whereas if you see these tech, although they lack in their customer reach, their scalability, but at the same time they are very adapted to the challenges, and they have very limited restrictions compared to the banks. So that's the reason why they are very innovative in their approach, and that is where we see as an opportunity for us to collaborate with these fintechs and give them a very seamless experience to ultimately to our consumers. And this is where this partnership work very well with us, and that is where we are trying to absorb a lot of services on fintechs, starting from the onboarding journey to simplifying the whole transaction process for customers, and that's partnership work very well now. And that is what we see, that you will see more such partnership happening in the future, because everyone have their advantage and disadvantage, and it is all about how we can capitalize the strength and work on the weaker parts.
Yeah, amazing part. But over here, the main challenge which comes around that, obviously, whenever someone wants to start a new company which is related to fintech, so they need a lot of APIs and microservices from banks actually. So now banks are obviously open to say that microservices and APIs and expose those particular rails and all those things to the startups and the fintech companies. But how the banks are keeping up to date with their technology? Because the tech, what we see in the fintech, they move it very fast actually.
Yeah.
But when it comes to bank, they go in a traditional way. Like what's the major, and how do bankers keep a track and also able to match that pace actually with the startup of exposing these APIs and making the technical things more faster?
See, if you see the banking is very bespoke actually. It's nothing that the X bank is doing and the Y bank is not doing it, because it's very bespoke. The whole differentiation lies in this adapting to these technologies. Second is how faster you can adopt to these technologies actually, because if you see the life cycle of any customers, as a businessman, they are exposed to a lot of applications. Okay, see, the large businesses which are their large corporate, mid-market and the large corporate, there the things are very sorted because they have enough employees to take care of the finance end-to-end. But if you see a small SME customer, MSME customer, or any startup, they work with very limited resources, and that is where they need whole automations. They need everything to be automated, digitalized, and everything should happen on a click of a button because they don't have enough resources to manage their finance and everything. And as a businessman, as I was telling you, that we are exposed to a lot of applications. They are exposed to payroll management, they are exposed to accounting, bookkeepings, inventory management, expense management, and then banking become an additional application. And that is your capability to integrate with your existing application, what differentiate you with the others, and how faster and how simple way and with minimum cost, how you can do it. That is the key for you to succeed in this. And that is where these fintechs and the banks play a key role in coming together, building a technologies, working with these ERPs, and bringing a plug-in integration kind of a place where you can automate, you can integrate your processes, and at the same time bringing more operation efficiency and reducing the overall cost of operation. How are you reducing? Because if you see in your finance domain, there are a lot of process which you do manual. So for example, if any corporate need to process a salary, what they do is that there is a payroll software, they extract the data from their payroll software, they extract the data in an XML file, they convert into Excel, and then they upload on the bank portal.
Correct.
And then while converting the file, there may be error, and while uploading, the bank show the error.
And due to this, does the entire transaction stops, or like only that?
The entire transaction stop, because this is a one single file which is going in, and which is again creating error, and this get rejected. So now this whole process can be avoided if the bank can directly integrate with the payroll software.
Correct.
And this can simplify the whole thing.
But this is happening now.
This is happening now. There are banks which are doing it now, and it's all depend. Not all banks are doing, but the banks who have adopted to these technologies and who are doing it, they are seeing the success. And that is where these startups, these new age businesses, and these SMEs, they need that, because they want to automate the thing. Because when they look at a bank, they look at from the future perspective. So today, if they are doing a X amount of revenue, tomorrow they will be 5X. Will their resources will grow like 5X? No. Then what they need to do is that they'll have to look at the banking so that they can automate the things. They can bring more process efficiency. That is how they want to do it, and that is how they want to scale it. And that is where these API and these microservices are playing a very key role.
Correct.
In your scaling the operations. And that is where banks are absorbing these APIs in terms of enhancing the whole customer experience.
But when it comes to, like, for example, they are like people who have been in the market for 15, 20, 25 years now. They know in and out that this regulation, this particular model, like will it work or not? What problems are there in this model actually? So like how you as a banker being in the market for so long, when any new company or a new startup, when they comes to you, when they explain you about a certain model actually, and how you help them in terms of understanding the regulations. Like, do you feel that a lot of bankers are doing it like you are doing it, or like any help towards this particular regulatory particular aspect to the startups?
See, the thing is that first of all, you need to understand why the bank can't do it.
Correct.
Although bank does it, but for them, they need to have the right infrastructure in place. Again, there is a lot of cost involved. So if a startup, if a fintech can do it at suppose at 100 rupees, for the bank it is 1,000 rupees. Because of the kind of resource involvement, the kind of regulatory approvals, the kind of compliances what they need to follow, and the kind of infrastructure need to build. That is very costly for them actually. For a startup, it's not that, because they are very adaptive, and I said they are very quick in around that thing. So banker always have a problem statement, and they look for not everything can be customized as per your problem
Correct.
statement. It has to be some mismatch is always there, but to what extent you're solving my problem. And that is the criteria what we look at when we look at these fintechs and when we look at these new age companies, in terms of, I have a problem statement, you have a particular solution. Is that there is a match in that, and to what level? And what is that I need to do?
It should not be two parts.
Yeah, it should not be the two part. And that is what we are now moving on a platform kind of a thing, where all these fintech services are being absorbed by these banks. And there are fintechs which are actually working for the banks, in terms of banks are giving them the project, and they are the one who is driving the whole project for the bank, is in terms of identifying the problem, and basis that deriving a particular solutions.
So this brings to a very interesting thing, like towards the global transaction banking and connected banking. Like what problem I faced, if I give you a scenario, in 2020 when I used to take money from a overseas company, be it US to India, there was one client actually sending money to Indian via bank was very difficult. We used to receive the money in 4 or 5 days actually. You need to get that inward remittance, all those things. Today, like there are like so many platforms also, British fintech also, and PayPal was there. It's not existing in India at that level, and charges are super high. Banks charges are always lesser, which I have seen, as compared to whatever gateway we use in terms of invert. So when it comes to connected banking globally, like how do you see this infrastructure is growing, and how this making life easier for startups and SMEs or corporates in any country sitting in different countries also?
You see, when it comes to the corporate, there are basically two categories of the transaction which normally did. One is the capital market transaction, which required a lot of regulatory clearance, and there are certain regulatory filings which are need to be done, and they have stipulated time frame where you have to adhere to those timelines in terms of doing the reportings and having the all the requisite documentation in place. Because so that is one part. The second part is on the commercial side, where you do import, export, where you're receiving remittances, where you're sending the remittances. In the both this side, actually things have improved a lot, and it's all because of the whole adaptability to the all the digital solution which is there. Earlier, which you used to say is that normally take 4-5 days. Now it's happening within 24 hours, and 24 hours because of the day-night differences which is there. Because international nostros, the money get routed to international nostro, and it takes 24 hours normally because of the time difference. But as and when you need to process the transaction, there are various layers which are involved. While for a bank, because ultimately we work under a regulatory framework, and any money which is coming into India or going out of India has to be accounted for. So if this is a capital market transaction, the regulator want to know who are the investors, what is the profile of the investor. Is there somebody which is should not be the case that some sanctioned country is involved, or some person with some negative background is involved. So every money has to be accounted for, everything has to be recorded there. Similarly, for a commercial transaction, which is import and export, everything has to be defined. What is the purpose of this transaction? Who are the buyers? Who are the sellers? What are the counterparty which are involved? Which are the countries which is involved? So there are various checks which are required. And these checks are predominantly into the two part of the checks which normally done. One is the operational part, where you see the underlying transaction, what is the payment terms, what is the underlying documents in place, and which all counterparties, and basis that you do the processing, you do the necessary checks, and then you do the swift exchange, then finally settlement happens, and then there are certain, and then the compliance check, which followed by a compliance check, where basically you do all the risk profiling of the counterparties, country checks and everything. So once both the checks get satisfied, ultimately get processed. But everything now, because of the whole adaptability toward the digital side, the TAT have improved a lot.
So that TAT only I want to understand. If you compare the TAT from 2020, because I won't ask 2015 because I used to do transaction that time. From 2020 till today, what's the difference of the TAT now?
So earlier there were multiple stakeholders which are there in the whole ecosystem. One is like your regulator RBI is there, then there is a custom which is there, then there are banks which are there.
Okay.
And everyone used to work in silos. Now things have changed because of the whole adoption toward the digitalization. There is EDPMS, IDPMS with there. Now everyone talk to each other. So what happens is that because of this, there is a real-time data exchange which is happening. And this also allow banks to process the transaction faster. Okay, and at the same time, it's quite convenient to the customer. So instead of customers sending documentation to the bank and following up with the bank, now they talk to the bank on a digital platform. So that has changed a lot. And that has improvised the whole process, through which the cross-border is now much more convenient and seamless compared to what it was before that.
Okay, so now in this rising trend, like obviously we have seen these particular topics were not that much very into the limelight. If I talk about like this global transaction banking, global wealth management, or global banking, anything, this was not into the use case or not into the market in 2019, 20, or 2015 also. Like, how do you see the trend shifting towards this, and how banks are evolving with this global transaction banking ecosystem, and how the infrastructure is growing for them? And also access to capital for people.
No, definitely. You see the trend that lot of, because of the way the India growth is shaping up, there are a lot of ultra HNIs and HNIs are growing in the segment actually. And that has led to, it's all related to demand and supply actually. The more the HNIs will grow, the more the requirement of better capital management, more private bankers, investment banker, and that is where the whole, because ultimately nobody wants to sit idle with their capital. Ultimately, they need to find the avenues to deploy the capital. And see, as a businessman, you know your business very well, but the dynamics of the financial market is very different. So that is where you need to have a expert in place to get your money parked in the right place, and that is where the whole private wealth management and everything goes. Earlier, for the investor or for the consumer, the market was very limited actually, because if I have to ask you that where you want to park your money, you'll say either stock or mutual funds. But there are enough avenues. Now the AIFs are coming up very well. People want to invest in AIF, but is that the right way to directly invest to AIF, or to go through a private banker and do investment in AIF?
So how does bank prefers? Like how do bankers or the bank prefer to do?
We do. That's why. Although it's not my domain, but ultimately how it happens is that banker also partner with a lot of AIFs in terms of providing the opportunities to their customers.
But doesn't that extends the timeline for that particular capital? It will be get blocked, right?
It depends on the instrument actually, because there are various instruments which are there, and it ultimately lead to what is the time, what is the time period or time horizon you are looking at. Okay, so the higher risk products definitely need a higher time zone as well, where you need to have patience, because in stock you can't play around actually, or in startups you can't play around. You need to have patience, you need to have that time horizon to ensure that you are getting the desired.
But the scenario comes here, like in the stock or mutual funds, most of whenever you invest the money, or the it's like duration can be like small term also and a long term, be it 1 year, 2 year. But with AIFs, the duration might exceed to 5 years, for example.
Yeah, that's it.
So that particular kind of adjustment needs to be done, correct?
That's important actually, because as I said, that's all depend on the instrument, the kind of instrument what you're investing. There are instruments which can give you a very shorter return.
Exactly.
But there are instruments which require a time provision, which require a time period for you to have that optimum yield. So that is what you need to keep in mind while investing there. And there are a lot of now tools, and there are a lot of platforms which are there where you can get all the advisory, and at the same time through which you can invest your money.
Okay, interesting. We'll make this more lighter now. So being a banker for so many years, like what happens with me, if something is not happening right, I just call my banker, I say, okay, yaar, ye ho nahi raha hai. Like it's taking a lot of time. I start yelling at him. So like any scenarios which might have happened with you, you feel that ki, how you control your anger and patience during that time. You obviously you're not sitting on the counter, but any scenario which happened with you, your personal experience.
No, it happens. It happens a lot, because see, as a banker, this is my business. I know my system, I know my process, I know my product. But I can't expect that my customer should also know the same thing. For him, if a customer need a bank guarantee or any underlying transaction, if he wants to, it happens to be immediate, and he always compare with some other bank. See, you need to understand, एक customers को भी एक psychology समझनी पड़ेगी, और ये होता है कि हर बैंक एक जैसा नहीं होता है. There are banks which has certain advantages. There are banks certain disadvantages as well. But people want everything to be good, and that is where there is a expectation versus reality check happens. Okay? So this happens with us also, is that that customer want us to understand them rather than we understanding our process and system actually, and that is where we have to align our thought process. So gone are the days where bank used to dictate their terms. This is my process, this is my system, and you have to adhere to it. Now bankers are deriving solution basis the customer business model. See, one good thing happened with this whole startup era is that they have changed the way the banking used to happen actually. True. And they have challenged the bank. Bhaiya, this is my need.
And
this
now
is my
bankers
systems.
and every person whom I talk to now, actually, he says ki haan, kal tak I will reply. Or else it was like after 7 days, 10 days, I am just chasing after the person actually.
मैं वही बोल रहा हूँ. See, अगर आज आप क्विक कॉमर्स में देखोगे तो there was never the case actually. हम लोग पहले भी हम FMCG companies और इन सब के लिए करते थे. We used to derive the solution, but these quick commerce have changed the way the banking used to happen. जो आज की डेट में हम 100 ट्रांजेक्शन प्रोसेस करें, आज सडनली 15,000 ट्रांजेक्शन उनके प्रोसेस करनी होती है. एंड दैट इज वेयर दे डोंट एक्सपेक्ट कि मैं जाके 15,000 ट्रांजेक्शन क्रिएट करूँ. हाउ यू कैन ऑटोमेट, हाउ यू कैन do provide me direct plugin integration, bulk processing, all those things, and they give us a project, and then we have to derive the solution to term them ki bhaiya how can I reduce yes on use case. So that has changed a lot, and that is where these startups challenge the bank ki bhaiya that you have to work as per my business, I will not work as per your banking systems.
तो पहले ऐसे था कि यार हमने तो बोल दिया कि 10 दिन बाद होगा तो 10 दिन बाद ही होगा.
10 दिन बाद होगा तो 10 दिन बाद होगा, बट अब ऐसा नहीं है. अब आपको बहुत अलाइन करना पड़ता है अपने आप को, बिकॉज अगर इफ यू डोंट अलाइन योरसेल्फ देन यू विल बी, आप मार्केट से आउट हो जाओगे, बिकॉज द कंपटीशन इज ह्यूज. एंड ट्रस्ट मी, दीज फिनटेक्स आर द वन हु आर चैलेंजिंग अस, challenging in terms of adapting to the new technology, and providing, and everything has to be focused on the customer, because what matters is the customer experience. And that is what the key differentiator which everyone can bring on.
Any bank can set this for if in case the customer experience itself will define like कि वो कितने दिन तक आपके पास रहेगा, how many more people he will bring actually, because now the word of mouth is very strong among the startup folks also. So how do bank manage their foreign exchanges and foreign transactions via their global transaction banking platform to make it more smoother and faster for the corporate clients or any startups across the different countries, or in majorly we'll say in India?
One thing, the bank does not need to manage the forex. Actually, it is the responsibility of the customer to manage the forex transaction, because they are the one who is exposed to the forex fluctuation. And trust me, this is a much more bigger risk than any other, because this may have a direct impact to your bottom line. Because today the way the forex market, because mostly it is INR USD, and the way the USD is behaving because of all those external triggers, no one can predict that where it will go actually. The day you say that it will go up, the USD will appreciate, you'll see that INR is getting appreciated. And at the same time, so as a customer, if you see the whole their payment cycle is that, so one, there's never it happens that they raise the invoice and at the same time they receive the money, because there is always a gap in terms of raising the invoice and realizing the payment. And that gap actually led to the whole foreign currency fluctuation. And because of the market volatility and the regulatory differences, they are always exposed to a certain risk. But yes, at a bank, there are tools which are available through which, one, you can safeguard your foreign currency fluctuation risk. But the only thing we need to keep in mind, these tools are there as is to secure your risk. These tools are not to make money. And there are times when the customer use these tools to make money and they further suffer more losses actually. So there are like hedging, which is there, which like under which you can do spot booking, forward booking, and all those things. It means that at the time of raising the invoice, because when you raise the invoice, because your payables are in INR, but your receivable is in dollar. So definitely you have to keep in a notional rate in mind. So while determining that notional rate, at the same time, you can through bank, you can book your future receivables well in advance.
So like for example, today, like with a very layman example, today if I have raised a invoice of say suppose 1000 USD.
1000
Today it is in 85 INR.
Correct.
After today it might be a scenario, it is 84.
Yeah, it can be 87, 86
also.
Yeah.
Then like if I have booked a slot of 84 with you, like will I get it during that time after one day? I will be getting an 84 only.
So there are two ways to it through which you can do this thing. So if you have a export and import both, it means that you have a receivables and at the same time you have a payable as well. So then what you can do is that you can mitigate the risk by retaining the currency in that particular domain. So like suppose you have a USD receivables and you have a USD payout. Then there is a account which we call as EFC account, exchange on a foreign currency account, where you can retain the currency.
Okay, so for example, I have received $1,000,
and you have to make a $1,000 payment. So you don't need to do the conversion.
Okay,
you can receive in foreign currency account and you can make directly from that foreign currency account. But suppose if you don't have a payables, you only have a receipt.
Exactly.
So then, and suppose you have raised the invoice today, and suppose today you're sitting on 1st of April, and when you have raised the invoice to your overseas buyer, and you know that 30th April is when you're going to realize the payment. So you can book for 30th April and bank will ensure that you'll get 1st April rate on the 30th April. So that is how you can secure it. So irrespective whether market move at 84 or 86, you will get at that defined rate, what you have booked at the time of raising the invoice.
Got it. But like for any normal people, actually, the scenario happens ki usually people get the payment very instantly when we work with the overseas company as compared to Indian companies. We also seen that. Yeah. What happens like if I have raised the invoice today of $1,000 and I receive the money like tomorrow, okay? In this, I cannot determine when I am going to receive. It can happen, the client is making the payment after 5 days or tomorrow or after 7 days. Like when that scenario happens, either if you have fixed a price, in that price you will get it, or if you have not fixed the price, the current day amount you will be receiving, right?
Yeah. So the current day prevailing rate will be applied to your transaction.
Okay. Today if it is 84,
so it is like a SIP. So either you can block your rate and ensure that irrespective of the market movement, you will get the defined rate, and where you're not exposed to any foreign currency fluctuation, or you can let it to the market. So irrespective, I'll keep on, getting the remittance every month, irrespective whether it is 84, 87. At the end of the year, I'll keep on getting money. I'll get on crediting the money. Conversion will happen. But at the end of the year, the graph will neutralize the thing.
Got it.
Yeah.
And usually, how much do bank charge like on these transactions?
So bank to bank it differs.
Obviously, on an average.
It's all depend on the volume actually. The bigger the volume, the lesser the margin. And all the settlement happen on the interbank rate. So there is a defined interbank rate by RBI, and it's like Sensex, how you depend on the demand and supply. The IBR keeps on moving. And on that, bank have their plus and minus, buy and sell rates,
Okay.
which they normally offer to the customer. And the margins totally depend on the kind of volume what you're committing to the bank and what the bank is realizing the volume. The higher the volume, the better the rate what you get.
But what's the average if in number? If you put that
So it can be like, it can range from like 5 paisa, 10 paisa, it can go up to 60, 70 paisa also.
Okay, is that
all depend, yeah.
Okay, depending on per dollar or per USD,
Yes.
5 paisa, 10 paisa.
Yeah.
Got it. So interesting. So like to understand this more actually, when it comes to SMEs or like small business owners based out in India, and when they want to do trade, but what happens? There's so many restrictions for them. Like what you believe as an individual, as a banker, that what regulations or what kind of new reformers should come by from the banks and the government to make this everything smoother for these people? Because if they start doing trade more, I believe the economy will grow a lot.
No, okay. So there are two categories of customers. One, the overseas company who want to come into India and set up their business and they want to do business in India. And the second category is the Indian companies who want to expand globally and they want to set up their overseas entity and everything. So both the side is the regulated one. So if anybody wants to come in India, there are certain guidelines, criteria, reportings which are required to be done. At the same time, when the Indian companies are going abroad, the same time they have to adhere to the guidelines, everything. Although there are a lot of work has been done by the government in terms of improvising the whole infrastructure, the digital infrastructure, and there are a lot of support and everything happened because earlier the time frame was quite high actually. But now things have improved a lot, but there is still a lot of work need to be done. One in terms of your policies, one in terms of, because see, any company coming from outside India to India, for them what they see that this is a very complex regulatory environment because they don't understand these things. Because if they have to put money, they have to go for filings. If they delay the filings, there are penalty which is there. Okay, and if they want to lend money to Indian company, there is a ECB, which is external commercial borrowing guidelines, which applied, which has a monthly compliances. If you default on those monthly compliances, again there is a penalty which is involved. So and same time, the Indian companies who are going outside, there is a overseas direct investment guidelines which they need to adhere to, and there are certain filings which need to do on an annual basis. So everything, so there are a lot of process and system, and for a businessman, they understand their business. But for them to adhere to these guidelines, they have a lot of dependency on their chartered accountant, company secretary, and legal. And that is there, they find it very difficult actually, because if the service provider changes, they struggle with that. And that is what we have to do that. We have to bring more simplification, more easier way. I understand there are regulatory framework which need to be followed, but it has to be make it user friendly actually, so that a layman also, a normal businessman can also understand, can adhere to these guidelines.
But this is not happening as of now, right? Or it is happening?
There are, as I said, there are a lot of work has been done in terms of simplification, but still there is a lot of way which need to go, especially the stringent timelines which are there. Suppose for a startup, it's very easy to make money. There are a lot of overseas VCs which are there, they invest money and they make money. But for SME, you see, startup are loss making. Most of the startup are loss making. SME, if you say, they are profitable, but still the startup see a lot of funding, and the SMEs struggle with the finance.
Correct.
Okay? And there are parties which want to lend to SMEs, but the problem is that the regulatory environment is complex for them.
After them only, everyone chases them for everything.
So that's the problem is that now. So that problem what we need to fix actually. The access to the fund now startup has. We need to have the provision so that the SME can also get the same kind of access to the finance, because see, we need both. We need startup also to scale, but most of the startups are in the service side. But if you see the SME, that is what a country need actually. Mostly SMEs are into manufacturing, and that is what we need to do, because the kind of initiative what we are driving is Make in India, and you have to relax your norms. You have to have a friendly policies, procedure, because any company they have to perceive that yes, this is something which domain which I can do it freely. So all those things matters, when you are a businessman and when you have aspiration to grow, then you want that all the policy, procedure, regulatory framework I should have an understanding. I can understand those things and I can abide to those things.
For anything related to early stage startups and SMEs, like when it comes, like how easy the banking is now, when I just want to open my account, or like there's a minimum balance kind of a thing which is very much was existent. Now zero balance has also came into the picture. Like what's the access to these people in terms of capital, and how some of the banks, like it can be any bank, are supporting in India to this particular sector, SMEs, startups. I'm not talking about the people who have grown a lot, like corporates.
One thing is that you need to understand that everything which the bank is providing you, whether it is your current account or any kind of services, there is a cost involved to it.
Correct.
There is a resource cost, there is a system cost, there is a process cost, and there are various costs which are involved to it. So definitely, if a customer open a bank account and they don't transit,
Exactly,
it's become a loss-making deal for the bank actually, because there is a cost which is going up, which is not yielding any result. Second thing is that a startup requirement is very different than the SMEs.
correct.
And definitely the whole access to finance, when we say that, the assessment for a startup has to be different than the SMEs is that. Because when you look at SMEs, you look at their balance sheet, you look at their ratios, your profitability, EBITDA and everything. But the same case is not available with the startup actually. Because most of the startup, because the kind of, they are there for disruption. They are there for innovation. They are there for adapting to the new age technologies and everything. And that is where they do a lot of investment in CapEx. And that is where you have to look at startup more instead of the balance sheet, you have to look at more from the cash flow side.
Okay.
And that is where you have to design your program. And there are a lot of banks which are doing it in the market. They have a separate program for the established SMEs, and they have a separate program for the growth stage startups. And that is where they are giving them the whole solution, whether it is their day-to-day banking, their access to finance, or giving them access to the global market. It's actually customized as per their business need.
Coming to the most interesting thing, like we see, like in India, we have seen from 2010 to 20. I opened my bank account in 2015. I'm sitting in 2025 now. I have seen a lot of change. But when it comes to more future, 5 years, 10 years from now, what are the emerging trends which you notice among the globally, or like in the transaction banking or the banking ecosystem as a whole?
See, this is my favorite topic. I can talk about an hours on this. See, one thing you need to understand is that now this time is that bank has to transform themselves merely from a service provider to a partner. Because see, ultimately my growth is depend on your growth. More my customer grow is more revenue I make and more I grow. So I need to act more as a partner in terms of facilitating your growth. And this is what the next stage of the banking has to be ordered. Because see, as a banker, I'm exposed to so many businesses. You know, I'm exposed to a manufacturer, I'm exposed to exporter, importer, startup, all sort of VCs, private equity. Anyone who is doing business, they need bank. And I'm the interface between you and your buyer, your supplier, your fund investor, everyone, you know. And that is where, you know, I should provide you a platform through which, so suppose if you want to expand into a market, I should provide you all the data. I should provide you access to your buyers, access to your suppliers. And at the same time, I can do a credit assessment for you. Is that, okay, you want to do a business with a new guy. I can tell you what kind of exposure you should take on this guy. And everything should happen on a platform through which you can access to the data, you know, because data and technologies, these are the two key things which are going to drive the whole future. Everything will be centered around your AI, machine learning, everything will be centered around this data and technologies. And that is what the whole transformation you will see. You know, so when I started my career, the focus was most towards from moving from cash to paper.
Correct.
Then paper to plastic. Then plastic to online banking, digital banking. And when I remember when the mobile banking was launched, it was mostly for the retailers actually, retail consumers and everything. Then it got adapted to the consumer now. And now from mobile banking, we have moved to API banking, okay, where we are doing a lot of, earlier bank used to consume 10 to 15 APIs. Now they're consuming more than 100 APIs. Any transaction of the bank is now API, whether it is credit card transaction, whether it is your payments, your collection, there is API which is involved. So there is a transformation happening. And that is what is going to take to the future, is that you're integrating with your data, you're providing the right solution to the customer. Embedded finance, credit decisioning, everything. So now if I have to, suppose you come to me and you ask me that, okay, fine, for my business, I need a 5 crore loan or any X amount of loan. what I would do is that I'll ask you all the documentation. Okay, give me your PAN card, Aadhaar card, your balance sheet, your IT filing returns, your debtors profile, your ledgers, everything I'll ask you, your stock statement, everything. And basis that, I'll do underwriting for you. And I come to a limit amount, okay? And the whole process may take a month, 2 months time. But how I can move this whole process to a 5 minutes?
Correct.
That is what the future is going to decide. Is that because your data is already there in the market. I just need to integrate with various platforms to fetch all the data through which the credit decision can be faster, and at the same time give you right access to finance. Because ultimately I have to facilitate. How I can facilitate? Through faster cash flow. So today, if you want to make payment to 100 vendors, how it can be done in a fraction of a second or with a click of a button, instead of you creating 500 templates on your online banking portal. So all those things is going to determine the way you're going to do your business. Because what we understand is that finance, normally with these startups, they neglect actually, but this is the core, this is the DNA of any businesses. The better you manage your finances, the better you manage your compliances, the better you grow, because that is the DNA for you. And that is where the whole game is going to shift towards.
There's one interesting piece like which many of the people don't know is like escrow accounts actually. Normal audience doesn't know about this. But in a transaction banking, escrow account is the very key thing when we move the funds. Like any interesting use case you want to say like which has been solved via escrow?
Okay, I'll explain you in a layman language what exactly is the escrow about. Whenever there is a lack of trust, is that is where the escrow mechanism all started from. There is that, suppose I'm an investor, I want to buy equity in your business, or I want to buy 100%, I want to do 100% acquisition. I want to give you money upfront and you are going to do a share transfer agreement and everything upfront. But I don't know what there in the future. Okay. It may, after taking over your business, I realized that there are income tax notices which are there. There are certain legal cases which are there to avoid, but now you're gone. And everything is on the company. Now I'm the company owner. It means it comes on me. So for me to have certain discipline and to ensure to have certain binding from you, that is where the whole origination of the escrow started actually, so that I have that binding from you. But later on, when the nodal got, the RBI has stopped.
Nodal was stopped now,
Nodal
right?
was stopped. And now escrow has
What
taken
was the
over
difference between nodal and escrow?
See, it is again, it's a settlement account. Okay.
Easy.
So ultimately now escrow, most of the payment aggregator, they use escrow to do the settlement actually, because escrow is a more regulated account.
Nodal was being used by them now.
Being nodal, both are regulated accounts, and there are certain underlying terms, condition, and between the parties, various parties, there are certain terms and conditions which are defined, and there is a escrow agent. Normally, in all the cases, the banks are considered to be the escrow agent, which adhere to those conditions. So before moving of funds, so there are defined criteria for you to receive the money in those accounts, and there are certain stipulated criteria for you to take out that money from the account. So
you cannot take out randomly.
No, you can't do that. This is again, as I said, this is a regulated account, and the banks are the escrow agent which control the whole inflow and outflow.
Okay, so this is like will be the last question, but a very interesting one for you. You being in the market or a banker for 18 years now, 18 plus years, like how do you feel like when you have seen that people were not able to transact via like mobile? Mobile was also not there, I believe. 2007, 6, you must have started your career, correct?
Yes.
So how do you feel as an individual this change? Like you have seen everything, what I believe now, because I have seen at least bank account was there on phone. You have not seen a bank account in phone during that days. So how do you feel as an individual?
No, so there is always apprehension to the changes actually, because I remember when the RBI have launched the RTGS, NEFT and all those things, people had a lot of apprehension because they were so comfortable with using the checks, because it gave them a lot of access because they delayed payment and everything, and there was a high value clearing, there was a local clearing, 3 days, 1 days, and people are very used to those things. And when RTGS, NEFT came, they have to farm the money used to have transfer same day, because RTGS used to happen same day, NEFT used to take 2 days, 3 days time actually. That was the time, and now the whole shift is towards quickly. UPI came, IMPS came, and all those things came, which provide the real transfer access and all those things. So people are always, they have certain apprehension towards the changes, but it's all about, because you have to adopt to this technology. If you don't adopt to the technologies, you'll be out of the market actually. Today, most of the companies are now hardly anyone use checks or even the RTGS NEFT. Actually, no one sends
one
the form
writes checks
application.
now.
It is all happened through a mobile click of a button. Actually, so that is what the transformation what I have seen actually. And although people were reluctant, but gradually, slowly they adopted and they've seen the benefit of it. Because for any business, the DNA is the faster movement of the cash. The more the churning of the cash happens, the more your business grow. So that is where, when people started doing it, either through their own self-interest or through by force, because the transformation has happened. Either you have to be there or you'll be out of that.
What will be your one last thought around the entire startup ecosystem towards the bank actually? Like one ending note.
So the whole idea for any startup to grow, because as I said, one thing they always keep on neglecting is that they have to make themselves relevant.
Exactly.
Even if you're generating a high revenue, but if you're not profitable to any bank, because most of the startup, what they do is that they are very cost conscious and everything.
And
they always
this leads to a scenario that people think that I am a loss making, but bank is not giving me loan actually.
Yeah, and more important that you have to make yourself relevant to the bank also.
Okay.
Because it's equally important that the bank is making enough revenue from you for you to give you all those priorities and to give you all the attention actually. Because tomorrow, as I said, the way you are growing and the way you are expanding, you'll be having a dependency on the bank. And I understand there is always a pressure from the investor. There is always a cost thing which is always there. But at the same time, you have to work out a way that it has to be a win-win relationship for a bank and for a user. It should not be that you're taking everything from the bank when in turn bank is not making enough revenue from you. And that is where the bank will take a call. And that it happens. A lot of banks have exited a lot of large customers just because their volumes were so high and they are making nothing from those relationships.
Volumes.
And that is where they have to take call. I will stop doing business rather than doing a business on a negative margins. So this happens with your business. There are certain customers which are very like high generating revenue, but you're not making revenue from them. Definitely you will give to, and it happens with us also. There are companies which are 100 crore turnover companies and the company which are 5 crore. That 5 crore company give me more revenue than that 100 crore. True. So for me, definitely the priority is that 5 crore. And then suddenly that 100 crore realizes that why the bank is not giving you enough attention, because the bank is not making it. So it is very important for you to be more relevant to the bank. You have to ensure that it's a win-win relationship for both of you.
Yeah, it was like interesting talking to you, Vivek, today. Thank you so much.
Thank you so much, Rishav. It was really wonderful to have you here. And this is an excellent platform what you have started. I'm sure this will be much more useful to your users, and definitely we look forward to it.
Thank you so much with that, and thank you so much guys for watching this, and we'll be coming with the next episode very soon. Thank you so much.